Last fall and winter were an absolute bloodbath for Dallas home sales. But now here we are, full circle, winter is back. We have to ask ourselves, how bad are prices this time around? Are they worse than last year? And more importantly, where are they headed from here? Well, hello, I'm Wendy Pinnell, and last year, between June and January, we saw a massive drop in home prices. It's when we would usually see prices drop due to seasonality, but on top of that, we had the Fed raising rates super aggressively, so the drop ended up being even more severe. But here's a question on everyone's minds, all right? How does this year compare to last year? We were well into the time period where prices were crashing hard last year. So let's take a look at the data. And secondly, let's talk about predictions. How far are home sales going to drop? And will they stop in the spring like they usually do? Oh, and spoiler alert, Realtor.com doesn't think so. So with all that being said, let's take a look at our first question, okay? What are the Dallas median sales prices doing right now as compared to last year? Well, if we look at median sales prices for the entire MLS, okay, we're talking big picture, between the months of June and November last year, we saw a pretty significant drop, okay? June of 2022, the median sales price was $400,000. By November, it was $365,000. Okay, now that $35,000 difference is a drop of 8.75%. All right, so let's take a look at this year. The median sales price in the entire MLS in June was $386,000, so it's lower than last year. In November, it ended up at $365,000, so that represents a drop of $21,000, or right at 5.4%. So summing that up, between June and November of 2022, we saw that drop of 8.75%. And during that same time in 2023, we saw a sales drop of 5.4%, okay? Bringing us back to, ironically, exactly where we were, a year ago, which is a median sales price of $365,000. If we were to take this one snapshot in time from November to November, median sales prices in the Metroplex haven't decreased, but they haven't increased either. Now, this gives us a general idea of where prices are, but the entire MLS covers, a massive area. So for the sake of accuracy, let's go ahead and take a closer look at each of the major counties. All right, we'll start up north in Denton County. In 2022, June started out with a median sales price of $485,000 and dropped by $35,000 to a median sales price of $450,000 by November. So the median sales price in Denton County between June and November 2022 had dropped by 7.2%. Now this year, 2023, prices were a bit lower to begin with, okay? June had a median sales price of $475,000 and November a median sales price of $455,000. So we're looking at about half that with a drop of 4.2% between June and November. So summing that up for Denton County, between June and November of 2022, 7.2% drop. And during that same time in 2023, we saw a sales drop of 4.2%, with median sales prices ending up at $450,000 and $455,000. So year over year, we've seen an increase of $5,000. Okay, moving on to the very popular Collin County. Last year, the median sales price in Collin County in June was $568,000, and in November, it was $495,000. Now that equals a difference of $73,000 and our largest drop yet of 12.8%. Now this year, 2023, we had a pretty large drop as well. June had a median sales price of $540,000, and by November, it had dropped to a median sales price of only $475,000. So that represents a huge drop. Median sales price 12%. So summing that up, between June and November of 2022, we saw a drop of 12.8%. And then during that same time in 2023, we saw a sales drop of 12%, with median sales prices ending up at $495,000 and 475,000. So for Collin County, we've seen a $20,000 drop in value. All right, let's take a look at Dallas County. Between June and November of 2022, we saw some serious action as well. The median sales price in June was $385,000, and by November, it had dropped to $350,000. Now that represents a drop of 9%. This year in 2023, June's median sales price was pretty similar to last year at $382,000, and November's ended up at $368,600. So we're looking at a drop of 3.5%. So summing that up for Dallas County, between June and November of 2022, we saw a drop of 9%. And during that same time in 2023, we saw a sales drop of 3.5%, with median sales prices ending up at $350,000 and $368,600. So we see home values inching up in Dallas County. Moving on, let's talk about Tarrant County. Now, the median sales price in June began with a median sales price of $376,200. By November, that price was $350,000. So between June and November, the price drop was 6.9%. This year, June's median sales price in Tarrant County was $358,250, and November's was $345,000. So this year, the median sales price drop was close to half that much at 3.7%. So summing that up, between June and November 2022, we saw a drop of 6.9%, and during that same time in 2023, we saw a sales drop of 3.7%, with median sales prices ending up at $350,000 and $345,000. Okay, so what do all these numbers mean for the current housing market? Well, we're definitely seeing price changes, but they're not as drastic, okay? The exception to that, though, is Collin County. And let's really think that through. Okay, Collin County has among the highest rated schools in the Dallas-Fort Worth area. Now, who do you think would care the most about those ratings? Yeah, families with school-age children, right? And when do those families move? Well, in the late spring and summer. And sure enough, if we look at Collin County sales prices, they leap with more volatility in the spring and summer and have harder drops in the fall and winter. Now, there is some strategy to be had here, okay? If you're considering purchasing a home in Collin County, and by the way, Collin County is one of the most expensive counties in the whole Dallas-Fort Worth area, right? We're talking about, the very popular cities like Prosper and Salina and McKinney. It is definitely a strategic win to time your purchase and buy during the fall and winter months, okay? We're talking about 12% reductions in price, right? That's like getting a $700,000 home for $616,000. And I realize it's tough with the kiddos in school, but there really is a very real and tactical advantage, especially when it comes to Collin County. Overall, when we compare the prices side by side, we're seeing price drops, but they really aren't dropping as much as they did last year. They're more in line with what we would see with typical seasonal price drops. In fact, what we're seeing this year actually lines up with what many of the previous years prior to 2020 have looked like. Now, that only tells part of the story though, okay? The big question we really want to know is, where are we headed? Well, if we believe Claire Trapasso with Realtor.com, Dallas could be in for a bumpy ride in 2024. She recently released an article where Realtor.com predicted year-over-year sales growth would be down 12.9%. So that's referring to volume, not prices. But even more compelling, they predict home prices in Dallas will drop by 8.4%. Now, you might think, well, Wendy, that's not that big of a deal. I mean, after all, seasonality is a thing in Dallas. Prices go up and down, by 10% and more. Okay, but listen, that's not what they're talking about. Okay, they're talking about year-over-year comparisons. So like in our year-over-year comparisons above, they were all pretty close to being the same, right? In November of 2022, the median sales price across the MLS was $365,000. Then in November of 2023, the median sales price was actually the same, right? $365,000. So if Realtor.com is correct, that median sales price next year could be $334,340. Okay, so that is compelling, and I'm gonna tell you, it really got my attention. Now, if you guys know anything about me, you know I am a very data-driven person, so I wanted to know their metrics, okay? What is their methodology? And I couldn't find one, okay? The actual article didn't offer any kind of methodology. So I researched, and I did find this quote by PR Newswire. It says, Realtor.com's model-based forecast uses data on the housing market and overall economy to estimate values for these variables in the year ahead. So that wasn't hugely helpful. Realtor.com is not really spilling the beans here on how they're arriving at these projections. But that being said, they did discuss some housing and economic influencers, and I think that we should go into those. So, for example, Trapasso starts off by predicting interest rates will go down. Okay, she says, against a backdrop of modest economic growth, slightly higher unemployment, and easing inflation, longer-term interest rates, including mortgage rates, begin a slow retreat. Now, I think many people will be glad to hear that. She continues, the shift from climbing to falling mortgage rates improves housing affordability, but it saps some of the urgency home shoppers had previously sensed. So I found that to be an interesting supposition. She says less frenzied housing demand and plenty of rental home options keep home sales relatively stable at low levels in 2024, helping home prices to adjust slightly lower even as the number of for sale homes continues to dwindle. Now, Realtor.com is speaking on a national level here, not specifically to Dallas, but still, there are some interesting concepts there. Okay, the gist of it seems to be that rates will trend down, but the slow retreat will kind of become like yesterday's news, and buyers will give it like the nod without any particular enthusiasm. And that lackluster response will cause prices to trend downward as well. So we have both interest rates and prices trending downward, which seems like an unlikely correlation to me. In fact, in the article, Trapasso even says small changes in rates can drive big changes in your monthly payments, especially when prices are high. But let's try to quantify that a little, okay? So just how low are they predicting rates to drop over the next year? Well, she does comment on that. Trapasso says the Realtor.com econ team anticipates rates will average about 6.8% for the year and fall to about 6.5% by year's end. That's about 0.8 of a point lower than rates were last week, 7.29% according to Freddie Mac. Okay, so let's explore that, okay? You have your median sales price in Collin County currently sitting at $475,000. So let's assume you use a VA loan and you finance that whole thing. At 7.29%, that monthly payment would be $3,253 a month. Now that same amount, $475,000 at 6.5%, would cost $3,002 a month. So your mortgage for the same amount of house would be $251 less per month. Now, I don't know about you, but for a lot of people, that would make a big difference to their budgets. In fact, I've recently watched a video, okay? It was titled, Why Everyone is Wrong About Interest Rates, right? And so that, title sounded interesting, right? Well, in the video, the YouTuber was saying a 1% drop in interest rates really wouldn't affect the market. Okay, well, I completely disagree. If your budget today at a 7.29% interest rate was $3,002 per month, you'd only be able to afford a $440,000 house. So 0.8% of an interest rate change does make a sizable difference. So let's see, in the article, Trapasso describes that small changes in rates can drive big changes in your monthly payments, but they're also saying that both interest rates and prices will come down. So right off, that doesn't seem like super logical to me, but there are other factors that the article addresses as well. For example, Trapasso mentions that rental supply is way up. For those that don't care one way or another, if they own a home or rent, and let's just say they have plenty of rental options, buying may not be something they really, are concerned about. She reports the rental vacancy rate ticked up to 6.6% in the third quarter. This uptick in rental vacancy suggests the recent supply has outpaced demand. She continues, looking ahead, The strong construction pipeline, which hit a record high for units under construction this summer, is expected to continue fueling rental supply in 2024. Then she makes a really interesting comment. She says renting is expected to continue to be a more budget-friendly option than buying in the vast majority of markets. Okay, well, that is really interesting to me. And I wanted to find out if it was true. So I took one of our rentals and I ran a market analysis on it. All right, I looked it up. It should be leasing for around $19.70 per month. Okay, so that would be the going rent. So the real question here is, how much would a housing payment be on that same house? So I went back in, did a market analysis again on sales, and it looks like it's worth around $250,000. Okay, so let's do some math. Let's assume our buyer has an FHA loan at 7.29% interest. Okay, they're gonna plunk down a 3.5% down payment with a mortgage amount of $241,250. The monthly payment, okay, will look roughly like this. Their principal and interest, $1,652 a month. Insurance, okay, just an estimate, $100 a month. Property taxes, $394 a month, and that's with the homestead exemption. Mortgage insurance, $100 a month. Their total monthly payment would be $2,246 a month. Okay, so wow, so this particular home can be rented for $19.70 a month, or you could buy it and own it and pay $22.46 a month. Okay, so Realtor.com is right. At least with this particular house, it would set you back another $276 a month to own it rather than to rent it. Now, just for the heck of it, what if this were new construction and you could get a forward commitment interest rate of 4.99%? At 4.99%, your mortgage would be $1,294 and your total monthly payment would be $1,888 a month. So that shows us a few things. In the pre-owned market, it is more expensive to own than to rent. With new construction and their nice little juicy incentives, it's more expensive to rent than to own. So, and does that make sense to why new construction is just slaughtering the pre-owned market? I'm telling you, interest rates are a powerful thing. Speaking of new construction, Trapasso mentions that as well. In the article, she points out, in contrast with the existing home market, which remains sluggish, builders have been catching up, with construction remaining near pre-pandemic highs for single family and hitting record levels for multifamily. And like I touched on earlier, she says home sellers are likely to face more competition from builders than from other sellers in 2024 because builders are continuing to maintain supply and increasingly adapting to market conditions. She continues explaining that they are increasingly focused on lower priced homes and willing to make price adjustments when needed. So where does that leave us looking into 2024? Well, for many of you, it may not be the right time to buy. I mean, if you're in a lower price point, it may genuinely be more affordable for you to rent than to own. And I know that probably flies in the face of everything you expect to hear coming from a realtor. I mean, here I am saying it's not always a good time to buy, right? And it's because the truth of the matter is it's not. Now, I will say, if you're going to buy, new construction and those forward commitments are a gift. All right, they offer a fixed interest rate of sometimes as low as 3.99%. And by the way, if the phrase forward commitment is new to you, you can find out all about it in this video, which you may want to watch next. In the meantime, Wendy out.